about to drop the hammer and dispense some indiscriminate justice.
Welcome back to Strongman Personal Finance, everybody. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's on Amazon for $3. And hater of garbage stocks that get pumped on YouTube and are given out like candy that are going to have you selling your butt down at the truck stop in retirement. Now today, we're going to talk about Snapchat stock, also known as Snap Incorporated Class A. Snapper. Now, Snapchat, in my humble opinion, is a buy. I think you should buy Snapchat stock in about 5 to 10 years. Now, why would I wait, strong man? That's so stupid. It's the future, bro. High margins, user growth, revenue growth, blah, 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 blah. Well, guess what, ladies and gentlemen? This company has yet to achieve profitability. They are on the road to achieving profitability, but in my humble opinion, you don't buy a freaking company until they have several quarters or even years of profitability, because then you can use the numbers to actually extrapolate in the future what you should pay for the company based on the discounted cash flows. Now, let me show you why I think this is a potential buy at some time in the future, because it meets a lot of my requirements, but as of right now, I'm not freaking touching it. And I don't think you should either. It is entirely too speculative. Now, if you don't know what Snapchat is, you need to get a life. But if you don't know, I don't use it anymore. It's basically an app on your phone, and you can send Snapchats to each other, and you can edit your pictures, and they have virtual reality things. It's a pretty cool app. But I don't use it because I'm over 22 years old. Now, let's go look at what actually matters, the numbers, because it doesn't matter how cool or exciting the company is or how fast users are growing and whatever. It's all about profitability. You want to buy a business that is actually turning a profit, because that's how you make money in the long run. Now, on Morningstar, they give it a fair value of $74, and its last closing price was $74.42. So it's roughly trading at fair value now, according to Morningstar. But I don't like trying to value companies too much when they're not even profitable. It's just, there's too much guesswork. It's revenues are going to grow this much and blah, 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 blah. But it's just a pain. I don't like it. I don't like unprofitable companies. Now, another thing you need to note is that there's no economic moat, which is a big deal in the long run, because if a competitor comes up, and there's a lot of competitors already, because Snapchat primarily generates their income from advertisements. That's the main way they generate money. There's tons of competition out there, and you don't know what apps are going to be created that may even be better than Snapchat and have the same business model. Now, let's go look at the numbers. So what I like to do is go on Morningstar and look at trends in revenue, gross margin, operating income, operating margin, and net income, all that stuff, and cash flow, just to kind of see what's happening with the company. So one thing I like is that this company looks like they went into business, or they started business in 2015. And if you notice, every year they have pretty significantly increasing revenue streams. They started with, it looks like, millions? $59 million. Then it grew to $404 million in 2016. And at the end of 2020, they generated $2.5 billion. That's a huge increase. Now, another thing I like about this company is the gross margin. Your gross margin is simply your revenues minus your cost of sales, which is whatever expenses they have to pay to generate the ad revenues. You take that number and you divide it by your revenues. That is your gross margin percentage. The higher the percentage, the more profitable you are on the top of the income statement. The actual profit of the company is on the bottom of the income statement for net income or net margin. So just because you have a positive gross margin doesn't mean you're profitable, because you have other expenses. Now, looking at this company's gross margin, negative 210% in 2015, negative 11% in 2016. And then you see every year it's increasing slowly but surely. Well, actually pretty quickly. Now, their last 12 months gross margin was 54%. That's pretty freaking high. That's a pretty profitable business, at least on the top line. but you have to factor in other expenses, research and development, sales and administrative expenses. So when we look at the operating income, they're probably spending a lot of money on research and development, selling, administrative, all that stuff, because the operating income right now is negative. They have yet to turn a profit from an operating standpoint. Now, their operating margin percentage is also improving every year. I like that. They're not profitable yet, but it is improving. It went from negative 650% in 2015, and over the last 12 months, it's now down to negative 22%. The company is losing money. Same thing with earnings per share. So it looks like they had even better earnings per share in the past, and then it looks like it went pretty bad in 2017. But you see the trend over the last 4 or 5 years, is that they had negative 2.95 earnings per share, and then it dropped to negative 0.97 in 2018, negative 0.75 in 2019, negative 0.65 in 2020, and now we're at negative 0.5 earnings per share over the last 12 months. That is a steady improvement. That is a good thing. Same thing with the free cash flow per share. It's going down. Well, it's negative, but the negative is decreasing. So over time, I think this company will definitely be profitable. But what I don't like is that right now, they're not making money. And it's really hard, in my opinion, to project, 5-10 years out in the future. So I think you should wait to buy this company. I don't think you should speculate on unprofitable companies. Now, it has a lot of potential, and I'm not going to knock on it too much, because at least the numbers are improving every year. You look at some of these other companies that people are recommending, holy crap, they're garbage. Usually people on YouTube recommend companies that have declining revenues, worse gross margins every year. They become less profitable every year. It's just ridiculous. At least this is a decent stock to keep in your back pocket, okay? Now, if you want to do more research, you can also go look at their financials. You can look at their income statement, their balance sheet, and their statement of cash flows. I don't really worry about the balance sheet too much. The main thing I worry about on the balance sheet is whether common stock outstanding is increasing. And you could actually look that. Well, it doesn't even, that's interesting. I know they're issuing stock. Okay, they must have super low par value stock. But you can see they have additional paid-in capital. It's been going up every year. That tells me they're issuing stock. But an easier way to do it is you look at the statement of cash flows, and you go down to financing activities, and you have net cash provided by, well, Morningstar kind of cuts it off. But here we go. Common stock issued. So it looks like they issued common stock in 2017. Okay. I guess they haven't, so it looks like they've been issuing debt more to finance their operations than common stock, which is not necessarily a bad thing because they're not diluting their current shareholders that much. So overall, I mean, I like the company. I've used the app before. I think it's a good app, and I like the technology. I think it's really cool and fun. I actually downloaded it just to, do a clown selfie for a YouTube thumbnail. But overall, I don't think you should touch this until it's actually profitable. So if you disagree with me, that's okay. I'm a more conservative investor, but I think in the long run, it's better to buy companies that are actually already profitable and have demonstrated profitability over several quarters or several years. You don't have to follow my strategy, but that's what I like to do. Anyway, that's it, ladies and gentlemen. Like the video, subscribe to my channel, buy Snapchat in 5 to 10 years after you do a discounted cash flow analysis, and you have a wonderful, delicious day.